For more, let's bring in Dan Ives, the Managing Director of Equity Research at Wedbush Securities. It's good to see you.
Great to be here.
Well, you heard the report from Mike and our conversation. What do you think?
Look, it's a tidal wave of shares that are coming out, especially on the private side. Some of those early investors are going to sell at any price. But I think so far the absorption right here is a positive in terms of what you've seen from the stock. And I think, look, this is a white knuckle period. And ultimately how this thing trades over the coming weeks is going to be key. And right now the street continues to be glass half empty on Lyft as well as Uber.
I mean, the fact is it's still, what, 27, 28% lower than the IPO price. How much did the fears of this early lockup period expiring have to do with the weakness we've seen so far?
I can tell you from institutional investors, it's hard for anyone to really build a significant position knowing this tidal wave of shares was coming out. So I think it has definitely hurt shares, but I think you've also seen with the likes of Uber, that's been part of the issue too, in terms of when them coming out after Lyft, that's been a negative on the stock. And right now, ride sharing is a prove me space with definitely an Everest-like climb to get back street credibility.
Why then are you glass half full?
Because we look at the fundamentals, and fundamentally, if I look at Lyft specifically as a domestic ride-sharing play, and what you saw this last quarter, I think they gave a lot of reasons that gave the bulls, I think, ultimately, in our opinion, you look out the next year or two, I think this is a penetration story which is just starting.
But it's a profitability story, isn't it, and the lack thereof?
That's the issue right now in terms of where profitability comes. Does it come in the next 2 to 3 years? That's why ride sharing right now, as opposed to some of the other ones that Mike highlighted, continue to be ones where a lot of investors won't own it, just given profitability is not on the horizon.
So is Lyft better than Uber?
Right now, I think Lyft's a better stock than Uber as a domestic ride-sharing play in terms of where you see that. Longer term, I think Uber from the sum of the parts and where they could get an Uber Eats and the overall business model globally, I think is a better story. But in the near term, I think Lyft as a stock could work better than Uber.
Interesting. You don't think that investors look at these companies as basically the same? They don't sit there and look at the granularity of each individual story. They're like, Uber's earnings were bad. I have no idea when they're going to be public, and neither, frankly, do they.
Profitable.
And so why would I buy Lyft? They're in the same boat, the same business. Even though there are differences between the businesses, maybe people don't see that.
Well, no, there's no doubt. That's been an issue. And I think right now it's a synchronized swimming situation between the two companies. You saw Lyft strong numbers, then ultimately Uber would have happened. That was when it took down Lyft. So I think right now it's a prove me sector. But I think if you look at where Lyft could go, there's a better opportunity in the near term in terms of numbers. And I think they saw that in the quarter.
Do you have a take?
So, I think the biggest problem for any of, not these particular stocks, but any stocks right now, is investors are so price momentum sensitive, and they've got to perform in an active management way, that you've got to give me a catalyst that tells me I'm going to make money in the next month or two, not in the next 12. But that's the problem that investors are having today in general. And that's why certain areas of the market that are rocking continue to rock, and certain areas that have been having trouble continue to have trouble. Nobody wants to step in the way of that price momentum in either direction.
Is there a catalyst that could turn the tide on the momentum story?
Yeah, I think the catalyst fundamentally is you're starting to see the price wars start to dissipate. That's significant. And I think ultimately in terms of ride sharing, if you start to see penetration levels increase and you start to see a share gain story start to develop, I think that's something that could help both players. But no doubt right now, just as you're saying, it's a glass half empty in terms of the street. And you've seen it since the IPOs, these have been mini disasters.
I was just going to add, so just to put a fine point on it, I mean, the price action today, down 1.25%. Is that actually a positive? And we were expecting this flood of shares to hit. It's being absorbed well. It doesn't look like there's this mass exodus of insiders from the stock. Is that a reason in itself?
This morning, if we talk and you ask me what shares are today, they're down 8 to 10%. So I'd call this a small victory, but no doubt so far they're losing the war in terms of what you've seen since the IPO.